if you rewind maybe 3 months, you may recall me talking about how the telco sector had badly underperformed for about 3 years, and it was actually starting to look quite interesting. I thought back then we were pretty much at peak pessimism, and that markets were capitalising an unsustainable environment, staying unsustainable, which by definition, and certainly by my view, wasn't likely to happen. I thought something would have to break and sentiment would improve, and thankfully it looks like that has been the case, and the outlook is definitely improving on the telco sector. If you talk about two biggest drivers in the telco sector, it's really fixed and mobile. And I just want to touch on, I guess, the two drivers on each of those, which are really the resetting events or the catalyst for people to have a second look. So the first and most significant one in mobile is obviously the proposed merger of TPG and Vodafone. That is big news. And then the second thing is the NBN rollout. We're basically through the hump here. So this chart in front of you shows the NBN rollout. On Friday of last week, the NBN put out their revised business plan, which had a massive downgrade in terms of their rollout forecasts. I suppose that doesn't surprise anyone, but just 1 million less households than they thought moving in the year ahead. What's significant about this is if you look at June 18, so the year just gone, 2 out of 4 households in Australia are on the NBN. If you look to June 19, you're going to see 3 out of 4 households on the NBN. So that's even on the NBN's revised plans. This was the numbers we were running with before the NBN business plan came out, so it hasn't really changed anything from our perspective or in terms of Telstra's guidance. But the point of this is we're through the hump in terms of the massive once-in-a-lifetime churn event and the fight for customers there. And I think really the price point or the reference point to look at is plans. We've been tracking NBN plan prices for a number of years now, and for the first time, we've actually seen them start to stabilise. So the pretty blunt lever of price has been the bit that's moved the most in terms of trying to grab customers, and we are now starting to see that stabilise, which is a positive in terms of the outlook on the NBN. Clearly, prices have come down, access prices are going up, so neither of those things are particularly positive, but at least you're starting to see the market be a little bit more rational, and clearly things will improve in the medium term. The second slide I really wanted to point you to was talking to mobile. The merger of TPG and Vodafone, in my view, is really significant as it does signify a return to more rational markets. Prior to this announced merger, everyone was panicking. You were going to see this battle, number 3 versus number 4, and a heap of collateral damage along the way. So everyone was panicking that the market was going to be very bad. But now TPG, Vodafone together, we're looking at a more rational market, certainly in the short term at the very least, which we know the market cares the most about. Many people say TPG is very, very aggressive, and that is true. But having covered TPG for many, many years, I know that David Teo is 100% focused on free cash flow, and he is 100% economically rational. So I think the whole merger of TPG and Vodafone is really about free cash flow and not having to double up on mobile capex. And what that means is for the next few years, he's going to be very focused on putting those two businesses together. This chart here really shows you that price matters to about 25% of the market. So 1 out of 4 consumers will take the cheapest plan they can get their hands on. The other 3 out of 4 care about different stuff. Why I'm bringing that up is if you look at TPG's market share and you look at Vodafone's market share, they're both around that 25% mark. So what I think you'll see is you'll no longer see them fighting each other for that 25% of the market. You'll see them be a lot more rational and sensible, and as I said, focus on free cash flow and paying down debt. So look, in summary, you've got the two biggest drivers for telco being fixed and mobile, and the outlook for both of them is definitely improving. On to call to action here. Look, our key picks. Telstra, we've been talking about for a while. We do still think they're the best place. We think they've got a reasonable strategy going forward and some good plans to change the business and realise value. Want to draw your attention to our key small cap pick, which is Over the Wire. These guys reported the best result I've seen in many, many years. Everything going up. It was a great performance. This stock is very cheap relative to its growth. And I expect they'll undertake some more acquisitions in the next probably 6 to 12 months, which is not in our forecast, so there's upside there. The biggest change to our recommendations in the month of August has really been TPG. It might surprise you to hear that we've actually upgraded it to an ad for the first time probably in 5 years. In terms of the investment view here, This honestly is really a backing the man call. I've always been very, very frustrated with TPG's poor disclosure. They refuse to answer really critical questions. Even in the right forums, they just duck and weave and don't answer anything, which is very, very challenging and very hard to value this business on fundamentals. However, this is a man to back. We know he's got very, very good form, and I think he will make it work. So I think there's a lot of upside, hundreds, if not billions of dollars of both OPEX and CAPEX savings from the combined group. So in the medium term, I think they're going to create a very good business there. So in closing, I think the sector has bottomed out. I think the outlook is improving, and our key picks are Telstra and TPG on the medium-term view and over the wire in the more short term. Thank you.